Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus is on Waaree Energies quarterly earnings. Remember, the solar PV manufacturer has posted a 15% year-on-year increase in their net profit, which has reached 362 odd crore rupees for Q2. Waaree Energies has posted a revenue from operations growth at just about 1% at 3574 odd crore rupees as well. This is on a year-on-year basis again. The company's other income has seen a rise as well, more than doubling on a year-on-year basis to 89 crores. However, the total expenses for the September quarter, what we've seen is has remained steady at 3165 odd crore rupees. That's also indicated effective cost management and the kind of expenses control that the company has been really doing at this point in time. Let's dive into understanding some more key insights from the quarterly earnings as well as a vision going forward from here. Joining us is the top management of the company. Ms. Sonal Shrivastava is now joining in. She's the CFO of Waaree Energies. Warm welcome to you. Sonal, thank you so much for taking the time out for this discussion. The first quarterly earnings after having a stellar debut on the stock markets. We've seen it was a remarkable listing with a 70% premium. Investors have really made a lot of money right there. We've also seen an additional 40% surge and an inching higher to 3743 and above that as well on Waaree Energy. So the first month on your D Street journey has been spectacular. And now we get on to the quarterly earnings and see how it goes from here. Why don't you begin by telling us on the earnings, has it met your own expectations? Has it been in line with your own expectations? And what have been the key contributing factors?
So first of all, thank you so much, Sakshi, and very good morning to all your viewers. Thank you for having me on the show. Yes, it's been a resilient quarter. That's how we look at it.
Yes.
And the way we break it down, you'll see the volumes have come in quite well. Last year, the full year, we had done about 4.8 gigawatts, and half year itself, we have done 3.3. So volume continues to have an upswing. We know the prices are soft in the market, and we'll continue to navigate that space. And if you look at control, in fact, it has expanded by 5%. So that element is being managed very well. There are other elements which we are building for growth. So overall, the expense has also come in flat. That helps us. And margins, if you look at the EBITDA, the operating EBITDA margins, we are pretty pleased with that number, which has come in at about 14.7%. And actually, it is higher than the full last year. So yes, a very resilient quarter, and we continue to work hard on our performance.
Okay, wonderful. So let's talk about the margins itself. You've talked about 14.7%, which is higher than the entire last year. Will it be sustainable at this? What is the band that you would look at for ending FY25 with?
Yes, see, I cannot give a forward-looking number, but all I can say is that our focus on managing the costs continue. So that's one point. The second one is, we are expecting the volume to climb. The trend will continue in the second half of the year. And as you know, we will have a commissioning of our cell plant as well, the first phase and the second phase, all by the end of this fiscal. So that's the second element which will help us on our margins. And the third also, our US facility will come on stream as well. So yes, all in all, good actions ahead.
Okay, and could you also give us a sense on the top line and the bottom line? What is your expectation in terms of the growth on a year-on-year basis? What could you expect?
See, we have to see how that pans out. As you know, we have good expansion plans which are under works, so that benefit will sort of be available next year, and it will show in the bottom line as well as the top line. And thereafter also, the third phase of our expansion, which is the 6 gigawatt of integrated facility, that also will come on stream towards the end of FY27. And that should also help us both on the top line and bottom line. So
Okay.
on track.
Yeah, tell us, break it up for us, for the revenue, what all has contributed in terms of segmental growth? Where do you see the maximum contribution really coming in from right now? And how do you see it panning out?
See, in terms of segments, we don't report a segment because right now we are just a module manufacturer and will continue to be so. Cell that will come in We're
Yeah.
not going to be selling that externally. We'll be consuming that in-house. So
Okay.
in terms of product, we don't have a segment. We of course have a EPC arm, which we'll see how it grows. But these are the broad ones, and they both really will continue on the similar trends.
Could you also tell us if there has been a contribution from export side as well? How much of that overall pie of your total revenues is exports versus the domestic revenues, and how do you want to see this going forward?
So in this H1, I would say it's good to look at more broader time frame. Export has come in about 28%, and we on a long term basis we'd like to have a good mix. We've said like 50-50, but even this level is good for us. We are looking to expand also in the domestic market and especially the retail segment. So I think these numbers will continue to play out, in similar trend going forward.
Okay. I'll come back to the margins front, especially because you've talked about all these expansions that you're looking at, which is going to be scaling up going forward from here. One, you've talked about a 3 gigawatt manufacturing facility in US. Then you're talking about a 6 gigawatt additional facility in the domestic market as well. So what happens when these expansions kick in? Does that impact the margins favorably? From 14.7%, are you able to build on to that? Is there a band of 13 to 15% that you will be comfortable? If you could just give us that idea.
No, certainly, we expect the margin expansion to kick in the coming years. So that's exactly what the strategy is. And the key benefit we will get from our cell backward integration in phase one,
Correct.
which is going to be in total, actually, the first phase is 5.4 gigawatts, and in the second phase, it is 11 in total. So that's number one. Number two, also, when we go even further backwards, which is ingot and wafers, that should contribute to additional margin. So, yes, we are looking for that roadmap.
Okay. Could you also tell us right now what is the current installed solar capacity, and what will that be by the end of FY25 and by the end of FY26 as well?
Yes. So right now we are 13.3.
Okay.
By the end of this fiscal, we will be about 14.9, which is our first phase of US facility going on
Okay.
stream, 1.6. And thereafter, we have another six coming in as part of the integrated facility. So all in all, going up to that 2025, 2021 gigawatts. And we'll see when we go for a second phase expansion of the US.
Okay. I also wanted this to be understood in terms of the macro, looking at how the government's blueprint is for solar capacity for the next 4 5 years odd. How do you see that scaling up? Where do you see this growing to?
No, I think we are very, very positive on that. We see a very buoyant demand now and in the near future, and huge plans right up to 2030. The government itself has announced 500 gigawatts from renewables, and solar is going to be a major component of that. And that we believe could be on the conservative side. We'll see some more demand kicking in as we see expansions in data centers and so on. So we're looking forward to that, and I think the pie is only going to grow.
Okay, do also help us understand. So, we do understand that you're the largest manufacturer of PVs in India right now. Right now, up until a little further back, everything was being assembled at your facilities, and then you're looking at increasing your capacities going forward from here. Could you tell us going forward from here, what all are you going to be manufacturing? How do we see you as a, grown strategy beyond PVs and beyond solars? How do we see you as a combined entity?
So we've always talked about, a transition, energy transitioning company, and
Yeah.
that's our prime focus actually. And you will see that we'll continue to expand in this phase. As a starter, in this board meeting, we've already announced rupees 600 crore investment in the
Okay.
developing infrastructure, which is primarily land and connectivity for renewable power projects, and this
Okay.
is start, and we will expand this as a platform. That's number one. Number two, we are also evaluating entry into electrolyzers. We won a PLI here. And we'll soon come back with details in the next 2 months of technology tie-ups and the investments that we will be making. And similarly, also on the energy storage solutions on the
Yes.
battery side, currently batteries are only on the mobility side. We've still to explore on the storage side for electricity generation. So that's another big area that we see. And we'll come back on this as well in the coming 2 months. And we've discussed this already first round at the board level.
Okay, and is this 600 crores being done or invested as internal accruals? Would you really need to go to the market also for further fundraise going forward from here? How would your funding be seen? Will it be a QIP? Would you go back with an FPO? Something on those lines planned?
No, currently it's going to be internal accruals and it's being done in 100% subsidiary.
Okay, understood. Now, do also help us understand, the other thing that most of the analysts are looking at is that this space is hot and happening. It's also going to be seen as a lot of competitive intensity that will be growing over the next few years as well. We already know some of the bigger conglomerates are already talking about. We've heard from the Adanis, from the Ambanis as well. How are they, and even the Tatas as well, how they are actually looking forward to building up onto this space. So, how are you really looking forward to that coming in competition that will be increasing going forward? What is that moat of yours that will continue to keep you, in fine shape and continue to have your market share protected in certain areas?
No, that's a very good question. All I can say is that when Waaree started its business early on, we have always faced competition. In fact, we have been in competition with the large Chinese players.
Yes.
World. So we welcome competition that keeps us on our toes, and
Yes.
I think the way demand is going to pan out, I think there's room for everybody. And regarding the moat, I think Waaree focuses a lot on how we manage our internal operations and margins and the discipline that we want to sort of maintain. And that remains a focus which helps us, even in different environments. So the resilience as well as the robust growth, all coming from internal efforts.
Okay, so both domestic as well as global competition, and you're okay with that. But is there going to be any kind of an element of, say, a price war happening or a margin war happening there? Do you think some of that will need to be considered?
See, if you look at the prices of modules, or any
Yeah.
inputs thereof, it's been in continuous decline. So prices have declined, and rightly so, because that has aided the penetration of solar. And we see it stabilize now, but we will see where it goes. But because of that, so much demand has come. So I mean, that's a good thing. What we need to do is, how do you manage that? How do you manage that environment? And that is really the focus. Like I said before, the margin, especially the manufacturing COGS margin, that's first focus. And of course, being lean on the other cost structure. So that will continue to be, and we have to face the environment.
Okay, wonderful. Well, thank you so much, Mr. Srivastava, for being with us on this special edition to explain to us what has gone into this quarter and what do we expect going forward from here. I wish you all the very best for the upcoming quarters, and hope to see you around very soon on another edition on Business Today Television to help us understand, and our wider audiences as well, the direction in which the industry is shaping up, and as a company, how are you really looking forward to the next few years shaping up for yourselves too.
Thank you. Thank you so much, Sakshi.
Thank you so much. With that, viewers, we wrap up this very special conversation with the top management of Waaree Energies. I hope this has given you enough and more clarity with the understanding of how the company is really looking at the current as well as the future demand going forward, the expansion on capacities, the investments that will go in, the competition that is rising, as well as where are the pricing trends really going to be shaping up, and of course on the margins and the top line and the bottom line growth as well. We've talked enough. Do let us know in the comment section if there is anything else that you'd like to know from Waaree Energies management as well, and we'll have them back on the channel very soon again to help you with all of those insights too. With that, we wrap up. Many thanks for joining in, but do stay tuned. Enough and more up ahead on your screens.
Hello and welcome to Easy Economics. I'm Siddharth Zarabi, and today on the episode with us is Dr. Thomas Matthew.